a weaker US dollar is probably better for the US from a trade perspective, because once again it makes US exports cheaper on the world stage.
Okay.
And part of the Republican and particularly the Trump, the MAGA philosophy is to have manufacturing jobs at home and to look after the US economy in itself first and foremost. A weaker US dollar makes you, if you're a US company, certainly much keener pricing-wise in the export market, which is good for your balance of payment, your trade surplus, trade deficit. Also, it makes imports relatively more expensive as well. Hey guys, welcome to this week's Money and Investing Show. This week specifically, we are looking at the future for the US dollar. Where do we see the US dollar trading over the next few months, and what are some of the drivers for that movement? This is such an important thing, irrespective of where in the world you are and how you're investing, because it is a global benchmark for economic health. Take plenty of notes, and as always, make sure you take plenty of action. Hey guys, welcome to this week's Money and Investing Show with me, your host, Andrew Baxter, and as always, my co-host, Olarenshaw.
AB, good to be here, my friend. Now, as the saying goes, cash is king. Specifically today, we're going to be talking about the US dollar. So not in the traditional sense, but rather where to for the US dollar.
Indeed, the greenback, the global reserve currency, and arguably one of the stronger currencies globally over the last couple of years. Where does it go from here? And I guess everyone has a view on markets, and we're not into speculation, but it is such a significant thing to have a bead on, because it drives underlying commodity prices, given that commodities are typically priced in US dollars. We do a huge amount of business in the US equity market, so for clients that have money, that are Australian clients, for example, that have money in the US, that movement has the ability to impact on their performance. And it's just such a central figure, I think, in any global economic outlook. So it's certainly very, very important to have an idea as to where you might anticipate it going.
Totally, and I can second that comment you made, being pertinent to investors outside of the US that are trading the US. I mean, it's arguably one of the most traded markets in the world. Your profit and loss is not just going to be dictated by the trades you've got, it's by the currency that you've also got. So very, very important to know where it's going. So if we can kick this off, AB, probably a few categories that we can work in. Let's start with news flow on currency.
So news flow, and we're talking about specifically economic news flow, the trend towards lower interest rates in the US is definitely the expectation. The statistics, the dot points, the plot that the Fed use for CPI and consumer expenditure is definitely showing signs of easing, and pretty much the consensus view is a rate cut in September. Which would be quite handy pre-election, I suppose, for the incumbent party. But that's where the smart money is sitting right now. And anecdotally, when you look at all the different things, there's one I pulled the other day for an inflation indication, and inflation interest rates are inextricably linked, I suppose, is actually motor insurance.
Motor insurance specifically?
Because it is part of the basket of goods that go into CPI. It's only about 3% of it, but it's been quite a major contributor to inflation costs.
Interesting.
Partly due to COVID, part because of the supply chain issues, not getting cheap parts to fix cars, pushed the cost of repair up, which sent some insurers bust or wanting to pull out of the market, which lent to capacity constraints, which then lent to higher premiums for people. And that's now starting to flow back the other way, which takes a lot of pressure out of the insurance space. It's just one small component, but
interesting.
Quite an interesting one from an economics linkage. And I love those linkages between his a sector and here's how you can project inflation from it.
It's funny when you look at CPI and you actually look at it individually, it really does tell a pretty strong tale.
I mean, we're seeing food prices come off a little bit in the US too. So that rate cut is likely to underpin the dollar. How does that work? In the most basic economics 101, if a country pays higher interest rates, there's a higher yield on your money holding that currency in an institution in that country.
So we're just talking plain interest sitting in the bank account, right, for US citizens?
As those, and for global investors.
And for global investors.
So
gotcha.
As those rates become lower, there's less incentive to want to do it. You sell your dollars and park it back in a more attractive currency. Very, very crudely is a way of looking at it.
Gotcha. Okay. So any particular news flow that's happened in the last few weeks that would indicate either way, other than rate cuts, for the US?
I mean, that I think is the main one. There are other areas which you could argue potentially are news, but we might deal with those under separate headings. But that to me is the major one that I'm certainly looking to. And it's one you can't ignore.
Speaking of can't ignore, what about the fake news and the speculation around the US dollar? Any thoughts on that? AB is our second category.
Look, fake news, what a great title
fake
that
news.
is. Fake news. one of the stories that's been circulating is Saudi Arabia had an exclusive arrangement to sell its oil in US dollars, and it's a 50-year arrangement that was set up in 1974. It hasn't been renewed this year. And that's a story I've actually heard from quite a number of different places. I then look at some other places that are a bit more reputable, and again, there was never an agreement in the first place, so you can't renew an agreement that didn't exist. It's always been an informal arrangement where Saudi Arabia has been able to sell its oil in any currency it chooses to, not just the US dollar. It's happened to select the US dollar because it's been the global reserve currency. So that sort of fake news type headline does rattle people's perception of holding a currency and where its outlook might look. And did some work at Bond Uni at the lecture we did there earlier in the year, which you came across to have a look at.
Cracking talk, by the way.
Thank you. Which was the US dollar's future as the world's reserve currency, and these are some of the things that we cited in that talk. But yeah, that one's an example where the jungle drums are beating away with something that really doesn't carry any basis, but is enough to sway people's opinion.
Any guidance on the US dollar at the moment, AB? So when we look at politics in particular, Republican win, any factors in there?
Absolutely. President Trump, one of the things he's asserted is that under his administration, a Republican administration, what they would be actively seeking to do is weaken the US dollar. And it's kind of almost an oxymoron for President Trump to talk about weakening the US dollar. You think it's all about strength, but the smart aspect to that, ego aside, is a weaker US dollar is probably better for the US from a trade perspective, because once again it makes US exports cheaper on the world stage.
Okay.
And part of the Republican and particularly the Trump, the MAGA philosophy is to have manufacturing jobs at home and to look after the US economy in itself first and foremost. A weaker US dollar makes you, if you're a US company, certainly much keener pricing-wise in the export market, which is good for your balance of payment, your trade surplus, trade deficit. Also, it makes imports relatively more expensive as well. So all of a sudden, if you have a choice between something that's homegrown, that now is a little bit cheaper on a relative basis, or importing something because of an exchange rate move down, a weaker US dollar, that import becomes more expensive. You're going to choose the homegrown product on a purely price basis.
That's not a bad thing.
Which again is great if you're looking at providing some nutrition, I suppose, financial nutrition for your economy. So that's been a pretty clearly stated objective that President Trump has said that would be a major part of their economic policy, and it stacks up, and it enables you to boost your manufacturing base. I mean, this could be political rhetoric. We're in an election cycle after all, but it's something that does then have the ability to weigh on markets. And when you couple that with the news of lower interest rates, which are very, very likely, a weaker US dollar is likely to be an outcome from that.
Okay, so looking further beyond this, when we look at the last category, which would be logic, so how other countries might be taking a view on the US dollar. Do you have any thoughts in that area, OB?
Look, there's a fair bit of pressure on the US dollar from a global reserve basis. And if you take, say, something like iron ore, for example, the world's biggest market to sell into is China. And the two major exporting countries for iron ore are Australia and Brazil. And for the Brazilian iron ore exporters, given China's their major market, so they produce in Brazilian real, which would be fair to say is not the most stable currency in the world, given inflation and interest rate history in that country. And then having to price their product from their domestic volatile currency into US dollars to then have to sell into renminbi for the Chinese market kind of is an extra step in the process that's kind of not needed, in much the same way that selling Saudi Arabian oil, if you were selling it to China, would make sense to price in renminbi rather than in USD. So there is some pressure that major countries that are exporters do want to be able to start exporting their commodities, for example, in other currencies rather than just simply US. So there's a growing pressure in that way, and we've talked about previously that sort of axis of countries, whether it be Russia, China, India, Brazil, and some of the other Middle Eastern countries, sort of, I'm not going to say ganging up, but forming their own sort of axis, if you will, for global trade outside of US dollars. And I think that's an area that you're going to see continued pressure to happen, especially if you've got a weaker US dollar, which isn't seen as strong as it was, or maybe as stable as it used to be.
Really interesting you say that, and I think we're at a pretty critical point, aren't we? We've got geopolitical tensions, we've got potential interest rate cuts coming down the line. We're at a very key point in history, and I guess the question we'd like to know, AB, is can history teach us anything from being in this situation prior?
I think the only thing we learn from history is the fact that we never learn from history.
Smart.
We keep making the same mistake over and over again,
That's
just in
right.
a different wrapping. One of the books I've been reading, actually for a little bit of time, because it's probably not the lightest read in the world, is a Ray Dalio book. I love Ray Dalio's books. I've read Principles, which is kind of his sort of modelled view on different things, and currently the changing world order is an area that he's addressing in a particular book, which is a really great read, actually. It's pretty heavy. What's quite kind of smart, you'd expect him to do something smart, that's why he's been the sort of uber success his entire career with what he's done, is that there are chapters and it's written in bold and normal font. And if you're a light reader and you just want the headlines and you're just interested in headlines, read the bold. If you want to be granular like I am, you can read the other stuff too. So it's a two-tier book. It's actually very clever. And specifically with that New World Order that he's talking about is this notion, and it's a really fascinating insight, because he's gone back to the 1200s and looked at the Chinese dynasty, the Dutch reserve currency, the French, Portuguese, Britain, America, and each time within each of those, if we can call them empires, there's a series of pattern events that happen to build that particular currency up to its reserve status, and then there's a very interesting and coincidentally exactly the same pattern for all of those countries losing their reserve status. And some of the things include political tension, wealth disparity, wars in different places, higher levels of inflation, more money supply.
Gotcha.
And you look at this and go, yeah, if this isn't history repeating itself, you'd be a fool not to at least take it on board. And I think, as per our lecture we did at Bond earlier in the year, China is kind of waiting in the wings as a logical choice as the global reserve currency, on the basis that, again, it goes into things in the book of education levels. And you see some of the, I know it's online, you look at some of the surveys we've just had on 4th of July, Independence Day in the US, where they're going around a campus talking to university attendees and going, oh, tell us why we've got a public holiday here on the 4th of July. It's like, no answer, because, okay, they don't know history, and you may argue that, well, history is not that important. Pretty important, but nonetheless, the level of education, I think, in a lot of the Western countries compared to the Eastern countries is really shifted. So high education, massive investment in infrastructure, massive investment in social well-being, a political unity, albeit mandated, as opposed to more democratically driven, et cetera, et cetera. And you can see that China, the shadow is there, and it's just a question of how long before that power shift happens. Okay, China's got its own economic dramas at the moment, as we know, and that may be something that holds it back over the next 10, 20, 50 years perhaps, but that threat's not going away. And with the US being in structural decline from a global reserve currency perspective, it's a matter of time before there's a next change. Who knows, maybe gold-backed crypto might instead be the global. It's an interesting time, and that shift is something, it's not a conspiracy theory, it's very obvious if you look at it through that set of lenses that Ray Dalio puts forward. And, who's Ray Dalio, for the benefit of those who don't know? Founder of the world's largest hedge fund. Great guy, very, very intelligent person, and has some really good modelling that he uses for his decision making. So someone I would argue is probably worth listening to.
I'd say so. Fair bit of authority there on the topic,
I'd say
AB.
so, yeah. Yeah, it is.
So in short, as we come to the conclusion of our podcast here today, AB, so we're looking for particularly a weaker US dollar from here would be the view that we're presenting based on the evidence.
Yeah, I think so. And so far as economically, interest rate cuts are very likely to lead to that, as usually as sure as day follows night. If there's a change in government, it's going to be something that's going to be actively encouraged by a Trump administration to see a weaker US dollar in order to keep the US on the right side of the balance of trade, as it were, to make it an exporter rather than an importer. If we look at what's going on in other places, some of it being fake news, but others, such as the example of Brazil selling its iron ore directly to China in its own currency, those are all things that are going on, and they serve to undermine that gold standard. Obviously, it's not a gold standard; it hasn't been since Nixon. But the gold standard of the US being the global reserve currency. Take that away. We've talked about it in previous podcasts, and I think we are in for a little bit of a softer time for the US dollar. Good for the US economy, mixed impact depending on how you're investing. So if you're a stock market investor, as you rightly said, you may well see some great gains out of US companies as they benefit from a weaker US dollar and a stronger export market. But if you're an Australian investing in the US, then understand that weaker US dollar may well impact on your P&L and what you make on the stock trade. You may give a little bit away on the currency moves. So maybe looking at some hedging strategies would make sense.
Very nice. AB, well, we said at the start, cash is king, maybe just not US dollar cash with this view. So thank you very much.
Indeed, anytime, my pleasure. There you have it, guys. Make sure you like, comment, subscribe. Most importantly, hit the notification button, and we'll look forward to hosting you next week.